What's going on, YouTube? It's your boy GT, co-host of the Six Pack Seven Figures podcast. If you haven't already, hit the like, subscribe, and don't forget to hit the notification bell so that you're alerted every time we drop hot content like the one we're going to drop today. So let's get into it. As you all know, it's income tax season and everybody's anticipating and getting prepared for their income tax refund. And so if you're like me, how I was many years ago, every time I got an income tax refund, I was thinking of the newest Jordans to buy, the next jewelry I was going to be putting on, or the next local bar I was going to have drinks paid for on me. Well, number one, I no longer drink anymore. But number two, I have found new ways to use my money so that it's working for me and is extending far beyond the money I've received from my income tax return. So I'm going to help us out today by giving us 3 things we should be considering doing this year differently with our income tax returns. Number one, the first thing you should consider doing is paying off an expense. Most of us are paying bills, trying to make ends meet. A lot of Americans are living paycheck to paycheck, trying to find ways to clear out some expenses to become more financially free. So this unexpected income coming in from the tax return, why don't we transfer it to be able to be used for one of our expenses? A credit card bill, a medical bill, maybe a car payment, maybe you're close to paying off a car, a personal loan. You use the money so that you can clear out that expense, hopefully completely, so that it no longer exists. So that's more money every month back in your pocket. So you're using money unexpected to pay off an expense so that it no longer exists. Number 2, consider saving the money. According to CNBC, 44% of Americans can't afford an expense that's $1,000 or greater. So that's a lot of people that can't afford to have $1,000 to be able to put up for something that comes up along the way in life. So that tells me is that most Americans are not saving money. Maybe you're listening to this today and you don't have a savings account, or you do have a savings account with not anything to talk about in regards to funds and how much is in the balance. So why don't we use the income tax refund this year to put into the savings account so that we can start putting reserves to the side, building some of our emergency savings, which should be 3 to 6 months, which is best practice. And then all of a sudden we have more there to the side in case of a rainy day that comes. As a pro tip, you don't necessarily have to have your savings account open at your local bank. One bank that's paying a significant higher interest than a local bank is Discover Bank. It's an online bank, and currently as of today, it's paying greater than 4% interest for leaving the money in the savings account. Your local bank's not probably paying you 4% interest. So now your money is sitting to the side reserved, and it's making you more money at a faster rate than your local bank. So there's a pro tip. Number 3, consider investing the money. So the income tax return, you bring it in, and maybe you've never started investing, or you haven't really been putting money for retirement, or you've been thinking about how to start investing and how to start money for retirement, and you don't know where to find the money from or what resources you're going to use. Well, the income tax return can be a boost to get you started. Now, you may ask, okay, what do I consider investing into? Why don't we start with something simple, right? Like the S&P 500. You can simply just put the money in the S&P 500 and allow it to sit there. And over the last 100 years, the average return in the S&P 500 is 11%. So although every year is different and fluctuates, if you leave it there consistently for the next 30 years, that $1,000, $2,000, $10,000, $5,000 you got from your income tax return should have accumulated 11% interest year over year. So how much more would that be in several years? Now imagine you took your income tax return for the next 5 or 10 years and did that. Now all of a sudden, closer to retirement age, you have a significant amount of money that you didn't necessarily use and you took from your income tax return that made you a significant advancement in your retirement income. So investing the money is another strategy you can consider doing with your income tax return so that it makes you more money in the long term. So if you like any of those tips, what I would encourage you to do is to review those 3 strategies, whether it's to pay off an expense completely, save money, or invest the money. And I would challenge you to then take it and apply it to your personal financial journey and use the strategy. And if it benefits you, number 1, like the page. Number 2, comment below which strategy you used and what was the outcome. And we'd love to stay in touch with you as you go on that journey.